Hey, sideways trading, right? We've been seeing a lot of it so far, but could it actually be a good thing? We've been seeing it on AMC and GME for a while now, right? GME a little less so because it's a little more volatile. Thank you, B, for the super. I'll check it in a sec. You guys noticed that AMC may have had a bit of a beautiful corrective wave here, unfortunately. However, when it bounced back, it is now just going in and out of this pretty boring, pretty volumeless consolidation and sideways trading. What does this all mean? Well, let us take Whiskiz, Whiskiz, as an example. This is going to be sourced right down below if you want to read along with us and give this source some love. Someone asked why staying delta neutral is better than just good old-fashioned stock value going up. To that I say, in a normal world, stock value is just going up makes sense, but this shady, loophole-filled, corrupted, opaque, bought and paid for free market with the government body charged with looking over it apparently is a revolving door for people having been in or heading for the financial industry, and so partners in crime that have been turning a major blind eye for a long time now, which allowed this whole situation to happen in the first place. Normal rules don't apply. And if that sentence was the longest sentence that I can imagine, I think you can also imagine smashing that like button will be able to get this word out to more Moon Platoon apes, as well as subscribing and hitting that bell button to start investing in your financial journey. So let's go. The rules here are that the short hedge funds get to dictate what happens to the price. They allow it to naturally rise a certain amount and then make money off their call options and then tank the price via extra naked shorting, ETF shorting, and wash trading. Oh, hey, we actually talked about wash sales, but wash trading? Well, this is an illegal type of trading where the broker and trader collude to make profits by feeding misleading information to the market, and high frequency trading firms and cryptocurrency exchanges use wash trading to manipulate prices, right? We're going to understand this in just a bit, but let's go back to that question here. Once more, I am going to be able to do some whiteboarding here. This is for the SLR rule. And we're going to be able to answer the question of exactly how do hedge funds make money off of volatility. Let's do it real quick. Let's say that the price of GameStop, I'm going to try to draw backwards here because I know it's inverse. Let's say that the price of GameStop is trading up, and then it goes down, right? We can imagine that this is likely going to be manipulation here, right? And let's assume for the purpose of this argument that this is manipulation. The point of manipulating it here is that you have now been able to short it here, sell it without owning it, and then you can buy it back whenever. This could have even been a naked short, which means that you didn't even have to find someone to borrow it from. You could just straight up buy it from the cloud. Not buy, but borrow it from the cloud and then sell it immediately, make profit here, and taking advantage of the volatility of GME, then be able to sell buy it back here at a lower price and fulfill that the cycle of a short. Seems manipulative, huh? Especially when people's livelihoods are on the line. Well, that is one of the ways that trading sideways allows us to avoid that shenanigan, right? If the stock cannot have any deltas up or down or any major like actual recognizable volatility, that actually could help us out a good amount. Then when the price is tanked, they make money off of their put options and then allow the price to naturally rise again to a certain point, make money off of their call option and then tank it again, make money off of their put options and then let it rise again. This is market manipulation. It forces profits off of their hedging to try and generate some extra liquidity to help stall things out. Now, once again, is this their extra secret evil plan? Actually, no, this is more like, I don't know, this is like freelancing, right? This is like Uber driving for supervillains. This is them making some extra cash because they're afraid one day we are going to catch on, especially with the SLR rule coming up, especially with the DTC C008 rule coming up. We are likely seeing them try and squeeze as much money as possible right now out of the volatility from the markets here. People talk about needing a catalyst for liftoff, and they talk about Ryan Cohen's options such as stock split, dividend payout, share recall, stockholder meeting, etc. But here's one that they that doesn't get mentioned. There's an ancient ape saying that we can stay dumb longer than they can stay solvent. What's one thing better than just outlasting them and their solvency? Helping to reduce that solvency. How? By inflicting an aptly named max pain theory, right? We're going to explain that for you. There's a reason we finished at above 180 multiple times, and there's graphs showing our specific max pain point on GME currently. It's right around 175 to 185, right? And we can even check out the Swaggy Stocks dashboard. We've been tracking that Swaggy Stocks dashboard. It is a data science sentiment analysis tracker for a long time. You can even just straight up look at the max pain calculator by time and look at that beautiful graph right here. Exactamundo in terms of the calls and the puts here, as well as the open interest down here. Wow, if you guys want to see that, we are also going to include that in the description. Swaggy Stocks, really good analysis tracker here. Okay, so we must be doing something right because Citadel was already forced to make bad rated BBB minus bonds for 600 million liquidation. We covered this a while ago that they were asking for money. Essentially, they were like, we need money. Why? Maybe we're going bankrupt, maybe not. Give us some money right now. Maybe we'll find out later, right? This was a very badly rated bond, which means they had to pull out all the stops to try and get it out quickly. So it turns out that we can really stay dumb longer than they can stay solvent, especially when we drain them of that solvency. Get outplayed, Kenny G. So I know it's not the most exciting and perhaps even just a bit worrying to some, but we know we are sideways trading by design. It's actually what we want, that we're the long institutions are doing to help make shorts bleed even more and force liftoff sooner than otherwise. All right, so too long didn't read. Sideways trading inflicts max pain theory on short hedge funds, countering their hedging by keeping them neutral to make them bleed out even quicker, unable to profit off of GME volatility via options, both up and down each swing. I know we mentioned that we are going to cover exactly what the wash trade is, so we are going to cover that real quick. Just understand that starting like almost 100 years ago, it was amended the Grain Futures Act and also required all commodity trading to occur on regulated exchanges. Prior to the prescription in the 1930s, wash trading was a popular way to stock manipulators to falsely signal interest in a stock in an attempt to pump up the value so that these manipulators could then make money shorting the stock. Essentially the exact same process of shorting the stock first and then bringing it back, just the inverse. Let's see. Wash trading and their relationship with high frequency trading, right? It came back to 2013, right, as the phenomenon of HFTs were becoming widespread. HFT is the practice of using super fast computers and high-speed internet connections to perform upwards of tens of thousands of trades per second. And we've already talked about this last time with the payment for order flow shenanigans. HFTs oftentimes are just bad overall for the health of the overall markets and for the retail investors specifically. Wash trading has been found to play a role in trading at cryptocurrency exchanges as well. So according to research by the Blockchain Transparency Institute, approximately 80% of the top 25 trading pairs for Bitcoin at cryptocurrency exchanges in 2018 were wash traded. Let's see an example here. So wash trades are essentially trades that cancel each other out and have no commercial value as such, but they are used in a variety of trading situations. For example, wash trades were used in LIBOR scandal to pay off brokers who manipulated the LIBOR submission panels for the Japanese yen. According to the charges filed by the UK financial authorities, UBS traders conducted 9 wash trades with brokerage firms to generate £170,000 in fees as reward for its firm for its role in manipulating LIBOR rates. Wash trades can also be used to generate fake volume for a stock and pump its price. Suppose a trader XYZ and brokerage firm collude to buy and sell stock and ABC rapidly. Noticing activity on the stock, other traders may put money into ABC to profit from its price movements. XYZ then shorts the stock, thereby profiting from its downward price movement. Overall, you understand this is nothing new according to the types of manipulation that we've seen in the past. So if this frightens you as much as it should, well, one of the best indicators of that we are not going to be taken advantage of based on our own volatility anymore is by our sideways trading. So that's something to take home to also to leverage down down on your financial education on the right way, doing your own social DD due diligence, making the research happen, and understanding that if you wanted to be able to at the very least get a little bit of a head start, a little bit of gasoline in your engines, hitting that subscribe and that bell button would be likely the best way to catch up to these bell-to-bell ticker symbol suggestions and technical analyses that we do on a daily basis, right? If you want to get your best news for financial education possible, that's the best way to keep informed. Thank you guys for liking this video ahead of time. Thank you for those of you who support the show by not only pressing that subscribe button, but the join button next to it and joining the Moon Platoon, the Meatball Space Legend tier, or the Gorillionaire tiers as mentioned here. And we will see you in the money.